Oh,
So
well,
let's
then
hit
there you go.
record.
I went ahead and hit record. I didn't know that Budapest Stan was ready.
I am ready.
Well, there.
Welcome to Alternative Finance Budapest Edition. My name is John, and I'm here with CFP Alex. I'm just kidding, dude. This is
You
my
stole
torch. I'm
my
just trying to
thunder.
run.
Okay, you can steal the meeting, but you can't steal me saying that I'm a CFP. I needed to tell everybody, including you, just to make sure everybody knew that I was, in fact, a CFP. And you
All
stole
right,
that.
all right. Take two. Go.
No, it's too late. I already hit record. There's no going backsies. It's all ruined. You might as well just
Oh,
stay in
great.
Budapest now at this point.
That's great. Well, welcome everyone. This is the Alternative Finance Podcast, and we like to talk about money. I am John, and I am here with my co-host Alex, who is, in fact, yes, a CFP to you all. If you didn't already know that. We are actually doing the podcast today in a little different style. I am actually located in Budapest this week, and I thought it'd be fun to do a podcast distant, remote, completely in different time.
So he
time
traveled to
zones.
Budapest specifically so that we could accomplish that. That's the reason.
Exactly.
There's no other reason he's in Budapest whatsoever. That's the reason.
Yes, I can't legally confirm or deny what I'm doing in Budapest, but I am in Budapest.
You're so silly. Well, yes, John, I appreciate you joining us here today in Budapest and making time for me so we can have a little conversation about the markets and just to see what's going on in the world. So I appreciate making time in your very, very busy Budapest schedule.
Can I just say to start, as somebody who, as we talked about, we really love talking about money on this podcast. The most interesting thing I found is that when I hit like 3:30, which is in 15 minutes, and that's 9:12 your time right now. It's 3:12 here. At 3:30, the market opens. So I get to get all my market information from like 3:30 my time to 10 p.m. I mean, it's just incredible.
That is a pretty crazy dynamic, right? Because when you
It
think about it,
is.
right, like obviously the market is open from 9:30 to 4, and like obviously depending on what time zone you're in here in the U.S., that could be like a pretty decent little range. But if you go like to other parts of the world, and you're talking about them investing in the stock market, like yeah, a lot of times the market's open while they're asleep. They're like if they're invested in the U.S., like the market's doing stuff while they're sleeping. That's pretty crazy. You don't really think about
It
that, to be
is
honest.
absolutely crazy.
Because the world's centered around the U.S., right? We only think about the U.S. stock market because other people invest here, but not very many people from the U.S. invest outside the U.S. in other stock markets.
Mm-hmm. Honestly, I thought about actually like taking it a step further and making a trade in Budapest. I thought that'd be so cool.
I mean, just because.
Just because, yeah, I'm thinking about doing that.
Yeah, you
I
literally
mean,
got to go and
thankfully, I have so much time, right? I mean, it's 3:30. My day is pretty much, on the third, portion of the day.
and that's the thing. You need to place a trade at like 7 o'clock at night just because, right? It's like, I'm placing a trade that's going to go through at 7 p.m. at night just because I can, because I'm in Budapest.
Well, I'm going to take it further. I'll probably do it like right at 9 p.m. It's like 1 hour before market close. But it's 9 p.m. It's just incredible.
Just place a trade as late in the evening as possible. Well, dude, now that we're talking about the market, this is a good place to kind of get it off and going here. Dude, what is going on in the stock market, dude? Because literally, I feel like I just need to, hang up my CFP hat, crawl into a hole, and cry myself to sleep with the uncertainty in terms of what's going on right now in the stock market. So what is
Right.
your,
Well, I mean, again, just
what's the
by
Budapest
saying
take? What's
that-
the Budapest take?
Well, the Budapest take is, I mean, again, we've talked about it, right? The fear of FOMO and missing out and putting our trust in a lot of people, including your financial advisors. But again, to your point, you've been doing this a long time. You're a CFP. Not many people have what you have. And yet you are still constantly surprised. So I think right away, this beginning takeaway is that, again, you're going to find as you invest and as you continue your journey or begin your journey in this realm, the unpredictability of it is always going to remain constant. People study this for 20, 30, 40 years and still can't get it right every time. So I think that is a very good point. Right now, the market is just crazy. It's all over the place. And I mean,
and it really
I think
is like,
we're in a time of uncertainty, right? We've got, the tariff stuff that's still going on. That's still uncertainties. I think that people are still not sure what to do. People are pulling money. People are, moving things around. Cash is one. I've talked to a lot of people while I've been here And because a lot of people with me are in the States, and a lot of people are just wanting to hold on to their money. It's just the physical
That's
cash.
I'm glad you're bringing this up because I was actually curious. You being in, like I said, obviously another part of the world, but probably more significantly, ultimately you have a huge, diverse group of people there with you at the event right now.
Mhm.
So I was really curious to see what kind of sentiment was just generally, right? So it sounds like people are holding on to cash, is what you're saying. They want to keep on their
Yeah,
cash.
again, I think a lot of companies that people work for, I'm sure, offer benefits. They offer 401ks. Maybe some companies offer matching abilities. People are moving things. They're changing things. They're putting less percentage away. This is just a small example, but again, it's all taking less percentage away, and putting into their retirements and doing just whatever the company's offering because they need that money now. That money is something that they want to keep and have in their bank accounts, in a checking account, or something that is a little bit more easily accessible. Or again, just taking it out of the bank and keeping it in the house. The physicality of having the cash tangible, which is again crazy considering we're in such a digital world. But yeah, again, I think right now it's just a lot of uncertainty, and
And so,
people are
and so
reacting
you
that way.
Yeah, and so it's what I've started doing for our chats here, John, is whenever I kind of have a couple different little social media things I follow that give me like data and statistics, and whenever I see something, I'll be like, "Ooh, that's interesting. I think John would appreciate that." I take a little screenshot of it, and the one that you're talking about right now is one that I did take a little screenshot of because I feel like we're in such a weird place because there are so many like headwinds pushing on both sides. Right? There's a tailwinds
Mm-hmm.
and headwinds on both sides. And one of the little graphics I'm sitting at right here is get ready for this stat, John. So to your
Mm-hmm.
point, I'm looking at a little graph right now where right now money market funds, so money in money market funds has hit an all-time high, and it's literally not even close, dude. So like literally the previous all-time high on the chart that I'm looking at was like, so 2010 it had a first little spike up, right? And in 2010 it probably hit around like close to 4 trillion dollars in globally in money market funds. When COVID hit, it took a nice little spike to new highs where about $5 trillion was sitting in money market funds. Right now, currently, on the little chart I'm looking at, $7.24 trillion sitting in money market. So 2 trillion more in money market right now than when COVID kind of came through. So I think what you're saying right now is being very clearly demonstrated in the data right now that people are putting
100%.
money into their money markets, into their savings accounts, which kind of is like, it leaves me kind of again confused, right? Because like, ultimately that is money not invested in the market, which ultimately you got to think that people are expecting things to be negative. That's why they're doing now. They're expecting things to get
Mm-hmm.
hairy. But on the flip side, that's a lot of money that could come off the sidelines and go into the market and push the market up, right? So I mean,
Mm-hmm.
it's just like,
But that tells you again. But that just shows you. I mean, that's incredible numbers. And again, when we were in during the pandemic, I remember it was like, I mean, the markets, were hitting all time highs. But then again, we had the pullback, and to hear it jump up to 2 point, what did you say, $2.3 trillion?
7.24 trillion.
So that's 2 point something more than the pandemic. I mean,
Trillion.
that's
Yeah.
just no, it's insane.
And again, and it's kind of crazy because I mean, I know that I've done that a lot. I mean, I know that I've encouraged my clients to do that a lot. So I mean,
Mm-hmm.
seeing that in the data is like, it's kind of widespread, and it kind of leaves us in this place where that could
Mm-hmm.
push the market in either direction, to be honest with you. So it's just,
Mm-hmm.
it's pretty crazy to look at it like
Well,
that.
I think if that continues to grow, and I think that we're going to continue to see that, I predict that we'll probably see continuous drops because again, when people take money and put it in a money market or a savings, it's not being invested in the market, which means more money is being pulled away and from it. So I think that we're going to continue to see it drop a little bit more. I happen to be looking at my portfolio right now, and yeah, there are some things that are doing well, but again, I mean, we're talking like multiple 2% here, another percent there on a daily basis. So, I mean, it
Yeah,
speaks for itself. But the other funny thing is, and I'm noticing it here. Um, and I'm, even talking about it with, people that I'm with, the spend though is still high.
It is,
Isn't that kind
right?
of crazy?
It,
So
it, it,
people are
it-
pulling their money out. People are putting it into very conservative, very accessible things. Don't want to play the risk in the market, but
but they're not cutting back.
travels travels at an all-time high. Eating out is
Yep.
an all-time high. As the generation, our parents' generation starts to get a little bit older, our generation and younger is rising, and the mentality is travel, experiences, less materialistic.
Yeah.
And
I mean,
again, when we get
100%.
through that, you're paying for things that you're getting a feel for. You're doing it for social media. You're doing it with your family. You're doing it for as an influencer. So whatever your reasons may be, all that money is being utilized towards an experience for yourself,
Yep.
versus materialistic things or a position in the market or whatever it may be that may retain value in time. It's amazing to see when people are feeling that uncertainty. You'd think that the mentality would be take the money, put it somewhere easily accessible, and not spend it. But spending is at an all-time high.
It's almost like, dude, it's
Travel
almost like,
destinations are like Tokyo, Japan, and a couple of Asian other countries in Asia are like all-time like trending destinations right now. I mean, people are just traveling like
yep,
crazy.
yep. And that's where, again, it really is kind of just like, it's like a perfect example of where we could pick out tons of examples of this, but just really conflicting data that makes it just like so difficult to navigate, right? Because for me, the big thing I keep thinking through my head is because I've said to people before, and I've said this to you and a couple different people, that in my personal opinion, the market, is it going to go up? Is it going to go down? In my opinion, the market needs to go down. Like in my opinion, because of what you're saying right now, because we're kind of in this place right now where people just will not stop spending. That's kind of what we've kind of observed at this point. So because of that, the sad reality is that my opinion is that from some respects, the economy is almost like in need of a good whacking, dude. Like we almost like need a wake up call in this country to like realize, dude, if you're concerned about things, like you should be changing your habits. You know what I mean? A little,
Mm-hmm.
and because that is really kind of the question that we're kind of facing right now is there legitimate concern? Because if there is, our behavior is not saying
Reflecting
that.
that.
It's not reflecting that
Mm-hmm.
exactly, and we need to
Mm-hmm.
like be able to.
Well,
But if it's not right, if that's not gonna happen, then this market can continue to get pushed up. And while I think that it doesn't change the fact the market is in need of the economy needs to be like a wake up call like that. You've heard our good friend Rudy from Alpha Investments and probably heard other people say this. The market can stay irrational longer than you can stay solvent. And that's kind of the situation that I see us in right now, is that the world we're in right now is like a fairy tale where like numbers are inflated. People are just slinging money with no regard for the law. But
mm-hmm.
while that, inevitably leads to potentially bad news over time, somewhere along the way, that can take a long time to come to fruition, and things can remain the way they are right now for a long time, especially if people are going to put money into the economy. Because the big question for me comes down to, are people going to need to pull money out of their investments to fun stuff? If that answer is yes, the market will probably see some downward pressure. If the answer is no, and they can leave their money invested, or even more so, take money from these 7 trillion in money markets and put them into the market, it doesn't really matter what the market needs to be doing or what should happen. What's going to happen is the market's going to go up. That's what's going to happen.
It's funny. I feel like even just talking about it, what we've just discussed, we talked about how in the previous podcast how our money's so important for us, and our money we need to protect it and do these things. And we've kind of only talked about what we should be doing and what the mentality should be for most people. But the other side of the coin is, and I think the pandemic had a real impact on that, is that we work so hard for our money. They want to use it. You want to use it. You want to use your hard-earned money. You work long hours. You want to go out for dinner with your family or your partner or travel or whatever it is. And that's why I think the spend, because of that year of pretty much a shutdown, for most of the world. I think that really set the tone of, you know, life's too short. And I was actually just looking it up because you actually made a good point about like, are people pulling um, money from like their retirement accounts? So I'm looking up right now to see if there's any data.
And I'd have to say the answer is probably no, if I had to guess. I have not looked at any data on that, but I mean, that would be the thing that would really apply pressure to the market in general, right? Because the market is supply and demand, right? That's a lot of factors that go into the supply and demand and dictating how that plays out, but it's
So
all
in
supply and
two,
demand. So
yeah, so it's
if
saying a growing number of Americans are actually doing early withdrawals. It's gone up from 3.6% in 2023 to 4.8%. So that's over a percent, 1.2% in a year.
yeah,
That's happening. Again,
yeah,
I just
so
think it's interesting. So that again, what does that tell you? It's like, okay, like, are they overspending and they're getting themselves in the hole and they need to pull out and they realize they hope that they can recover that down the road for, you know, future self for them, for
yeah,
their
or
future
they don't
self.
even necessarily know the damage that it's causing, to their full long-term
Exactly.
plans, and they are just like searching for solutions. You know what I mean? Because that's probably the
Hmm.
more common scenario is that like I don't have an answer. Here's money. It solves the
That's an
problem.
answer. Yeah.
Boom, done. That's as simple as it is. You know what I mean? Again, when the reality is like again, like there's a lot more conversation that can go around it than that. But to the point that we're talking about earlier is that like yeah, it's what you said about people want to be able to do this stuff, but even furthermore, we're at a point now where it's like now the things that they want to do are like firmly entrenched into their habits, into their lifestyle. So now it's like
Hmm.
now I gotta take something away. I gotta like give something up in order to
Hmm.
make the change that you're talking about. And I feel like that is just such a long shot from when you're talking about Americans in general. Like they're not going to give it up unless they absolutely have to.
We have to.
And again, and I think that like dipping into things like retirement savings and things like that, I could definitely see that being like a natural thought of people who just don't know any better, right? They don't know, like again, like
Hmm.
here's money, it solves my problem right now, done, solution found. No, when
Hmm.
again, it's but if we
More
start
of
to
the
see
quick
stuff,
and easy path.
and if we start
And
to see stuff like that, right, or even people like young people, right, because I think that definitely there is an element of this market that's fueled by not only like institutions and algorithms and things like that, but definitely I think the retail trader, like the everyday like you and me trader, especially with Robinhood, dude. That I think Robinhood, dude, changed everything, man. I honestly think that
yeah.
Robinhood has been a game changer in terms of the market because I think the amount of young people, and not even just young people, just like I'll say inexperienced people. The amount of inexperienced people who are now actively trading through something like Robinhood, it is just like wild how much of an impact that can have. And again, those types of people right there. So, right, those people, if they need to liquidate, if they're actually like, over the last like 2, 3, 4 years, because you and I have been there, dude, we've got that false sense of confidence where like you're making money investing and like, oh man, maybe I should quit my job and do this full time. I guarantee you, while they maybe not quitting their job, I guarantee you there are people who are playing in a pool that they have no idea the dangers that are in the water with them. You know what I mean? They just have no clue
Hmm.
because the market has been just running like crazy. If those people need to pull funds out of the market to pay for debt, to pay for rent, to pay for whatever, again, that will absolutely be the type of action, like, trade action that you start to see pressure on the
Hmm.
market. Because again, I think that that group of people plays more of a role now than ever before, and it's not close, in
Yep.
my opinion.
Hmm.
Yeah, the way
100%. I think.
the amount of times I see like options advertised now, dude, options are so common. I can't believe it. When I first started trading options, like nobody even knew what options were. No one touched options. But now
Hmm.
it's like because of Robinhood, did I see like everyday people just like, oh, I bought this call option and like and I'm like, whoa, you all are crazy.
Hmm.
Like, what are you guys
And that
doing?
is the other, and that's the other component because you're seeing it. I mean, like again, and I know we've talked about it, so we sound like a broken record, or I do, but that's from social media. You're seeing that, and again, other people are seeing that, and so it's the mentality of, oh, I'm doing this, you can too. So people, again, not knowing what they're doing, are jumping into this pool and don't realize, okay, this is not sunshine and rainbows
Yeah, they just follow
for
them and they're
everyone.
like, again, I see these Instagram posts, these guys on there like, oh yeah, so I've been looking at these stocks, we saw it break this level, so you're going to want to see these Fibonacci retracement levels. And they're like literally, and they got like hundreds of thousands of followers and people just liking it and like all about it. I'm like, there's no way any of you have any clue what this dude is talking about like right now. There's no shot you have. But again, he's basically, in his own way, kind of telling you how he makes money and telling you how to do it. So everyone like flocks to that and like loves it. And again, I think when you're in a situation when the market's been going up and up and up for 3, 4, 5 years, really. I mean, COVID was a little blip, but other than that, I mean, when you're in that type of situation, it's going to be really hard to tell somebody that they're like, they need to take a deep breath and maybe think it through a little bit more. They're going to be like, no, I'm good. And also another thing, so I want to talk about this little graphic here. I got another little graphic pulled up to show you. And I think this kind of is another significant factor in kind of what we're seeing in the market and like the world right now is I think there's a huge wedge. And this has kind of been a narrative for a while, but a huge wedge being driven between the upper end and lower end in terms of classification. So let me read this to you real quick. So I'm looking at a chart that basically has a bunch of different average net worth by age. It's like going by 20s, 30s, 40s, all the way up to like old age. And it has like your average net worth versus the median net worth. So it's telling you what the average net worth is, and then it tells you what like the median is. So like the middle, like actual middle number. And so let's look at our age first. So in the 30s, get ready for this. So if you're in your 30s.
Let's go younger.
Okay.
Go like 20s. Go like fresh out of like school.
No, let's do 30s. Let's do us. Because again, my point will be made. I can really make my point with any one of these, but ours is again.
Okay, fine.
This is our age. It'll mean something to you and me right now. Let's look at our age first. So in the 30s, the average is $317,000. Now,
wow,
right? That's crazy high, in my opinion, for 30-year-olds.
I mean,
but
that's your average like net worth, or your
average net worth of people in their 30s. That's what this chart's saying. Average net worth. And I'm sure there are a lot of people out there who are listening to me like this guy is literally on drugs. Like there's no way that's right.
Or feeling, oh my gosh, I'm so behind. I'm not even close to that.
You got it. And if you are sitting there feeling that way, get ready for this. The reason for that,
I'm feeling that way.
Dude, I'm feeling that way. Dude, I'm sure a lot of people are. But the reason for that, right, is because the median net worth in the people in their 30s, so like the middle number. You ready for this, John? You want to guess?
No, I don't want to guess.
36,000. 36,000, John.
Okay, I would have probably said 60.
So what that means? So yeah, you should have, but that would have been a really good guess. So what that means is that the middle, like if you look at all the list of people's net worth of everybody in that category, the middle is 30, whatever I just said, 31, 36, 36,000.
36.
Yeah. But the average at the end of the day, when you add everybody up and divide it by the total number, goes all the way up to 317,000. So what that means, brother, is that means that the top end of that curve is so big and so heavy, and their net worth is so high from all these OnlyFans and content creators and whatever, athletes, whatever the case may be. But that top end, they have so much money that they're dragging the average all the way up to $317,000. And that trend continues all the way through it. So basically, if you go like I'll skip ahead to like the 60s. When you look at like the 50s and 60s, those numbers are 1.4 and 1.7 on the average, and then 288 and 438 on the median. So you can literally, the point being that there's this like huge gap between the top end and everybody else, and those numbers right there can skew everything so much. And that's exactly what you're seeing in the stock market too. Because I'm looking at the stock market, a little graphic right next to it, which is the stock market. It's showing that the Mag 7, the big 7 stocks, so like Apple, Microsoft, Google, Nvidia, Tesla, the Mag 7, those stocks right there. Let me pull this little graphic up. Let me find it. Here it is. The S&P 500, the entire market cap of the entire stock market, is 52 trillion. The Mag 7 make up almost 17 trillion of that. So they make up a third of it.
Wow.
So literally, those 7 companies, how they do accounts for 33% of the overall market performance.
Again, you hear that and it's just like,
It's horrifying, honestly. It's pretty
yeah.
it's scary, dude. It's really scary because something like really negative happens to like Nvidia, and that alone could like pull the market down. The entire market needs to like
Hmm.
fight that off. You know what I mean?
Or like we talked about before, let's say an investor happens to just have the majority of their stake with Apple. Imagine when they do something that instantly drags Apple down. It's going to impact. That's a heavy hitter.
Yep.
I
So
mean,
I mean,
my
yeah,
God.
we're at this point right now where it feels like it's really difficult to know what's going to happen because the normal trends and normal data doesn't really necessarily matter anymore. There's not only like new technology and is a new dawn as we always say around here, but
It's a
also
new dawn.
you're talking about a new generation of people who think differently, who work differently, who do things differently,
Hmm.
and that really makes it to a point where it's just like, yeah, it's pretty crazy talking about my world. I was watching on CNBC. I saw a stat on TV the other day that they did an interview where, like, with all the money that's supposed to pass from baby boomers, from like our parent generation to our generation, and apparently, when interviewed, 81% of people our age said that when they inherit their money, they're ditching their parents' financial advisor. 81% said that.
I mean,
And the
that's
reason being because they want
crazy.
more. Because kind of what we've talked about the whole time. Because they want more. They want someone who
Hmm.
can give them advice on things like Bitcoin, on private equities, on life advice. They literally said
Yep.
that in the survey. And they literally don't want someone who's just going to be like your grandpa's financial advisor. They want someone who's going, and all this kind of points to how it just makes it increasingly difficult to interpret data because there's so many new variables. There's so many new things going on.
Hmm.
It's just crazy.
It's almost like a brand new market.
It is.
It's
It
like a new
really,
market
really.
opening for the first time.
And that's why when we
Everything
look
else
at
that
it,
was in the past data is just completely irrelevant, or not completely irrelevant, but most of it's unusable because,
it
like you said,
borderline
now we have
is.
all these other variables. We have AI, we have social media, we have, I mean, all these things that are booming or coming out, and it's just going to get more and more intuitive. So those variables are going to probably continue to change over the next, 5, plus years. We probably won't even start to see concise data until after that time frame.
No doubt. And that's why when I look at like stuff like, because you know how much I use my charts and we look at stuff like the moving averages and the MACD and things like that, when I see these things that are so out of whack and I'm like, this is going to have to correct itself. Then I hear Elon Musk say things like AI can increase basically the market capitalization of our economy by like 10 times. And I listen to him and I'm like, you know what? This dude's probably right. Straight up. Like he probably is actually right. Like
Yeah.
I don't know about 10 times, but when you say something like that, like when you think about like the top end potential of what something like AI can provide to like a profit margin, to like profits, it's like when you think about it like that, like maybe we live in a world where what used to be a really ridiculous, MACD like rating, or what used to be a really ridiculous, like, extension from the moving average is not so ridiculous in today's new world. Maybe that's just like what's
Hmm.
going to be normal because we're at this like, really scaled up place. And but then on the flip side of things, right, there's just so many tailwinds. And, as we're kind of wrapping up toward the end of the time slot here, I mean, one other graphic I want to talk to you about and kind of just like mention it because again, it's like, there's just so many like hard to decipher things going in both directions. Look at something like the housing market, bro. The housing market is in a real like, coin toss type of area. I saw a statistic that there are currently 500,000 more sellers like listing sales than people like looking to buy for a house. Like I don't know how they get this
Hmm.
data for housing market, but basically the point is there's a huge wedge in terms of people selling versus people buying, and there's a lot more houses sitting on the market for like 30, 60 days
Hmm.
plus. A lot of stuff just sitting out there in terms of inventory. Again, but on the flip side, there's like, are people like going to be jumping to buy properties? Maybe, maybe not. Like, so the housing market is like one of those things again where it's just like I feel like there's just no real way to know how when one domino falls, what the next one will be. You know what I mean? Will it
Hmm.
be prices come down and then rates come down a little bit and then all of a sudden there's a huge wave of buyers, right? Or are those people that are, become comfortable being patient, are they going to just sit back and wait for, things? And then because if that happens, and that obviously creates like a bear market and, a bearish housing market, which is absolutely going to impact the rest of the economy, like without a doubt.
Yeah.
Real estate has become such a big thing in people's portfolio at this point. But
Hmm.
but the point is,
But
dude,
I feel like, I mean, correct me if I'm wrong. I feel like the housing market overall has kind of maintained, like, that this was kind of more expected, right? I mean, we've been through this before, where house prices have just gone, astronomical, and they have been ever since, post pandemic. And now it's starting to cool off finally, where houses are sitting longer, um, and people are dropping the prices, or people who didn't want to sell until later because they thought the price was going to go up, didn't put it up for listing right away, and then now the prices are starting to sit or cool off, and now they're like, oh my gosh, like it's gonna drop, lower to closer to what we paid for it. We, should have listed it sooner, and now they're listing it, and again, there's not as many buyers. Again, another, you know, factor too, though, I think is, again, the younger generation is getting a little older, and houses may not be as desirable as they used to be.
Furthermore, bro, think about what we just said about like the net worth disparity between
Hmm.
the average and the median, right?
If the
So
median is 38 or
those
36,
people, those people, so
can't
what
afford
that?
it.
You got it. And not only can they not afford it, they won't be approved again because with that kind of disparity between that kind of net worth and that, well, that's not obviously your income, and your debt to income is going to be far more important when you're applying for a home loan. Given that disparity between the net worth average and median, I'm willing to take a gamble and say that the people that are in the top end of that also make way more money than the people
Hmm.
all the way down the curve. And all those people down the curve, somewhere along the line, probably way closer to the top of the list than we feel like it should be, those people can't even get approved. You know what I mean? Like,
Yep.
because if they're, especially if they're not like married or have like another income with them, because again, like if you have student loan debt or any kind of like debt that you're carrying from like a normal thing from our generation, and then literally these houses have inflated up here and the mortgage is calculating out to be whatever, you're not going to clear debt to income ratios. I mean, to
Nope.
basically even get approved for the loan. So, so it really kind of enters like this position where it's like, but having said that, again, that's not to sit here and say. So to answer your question from before, like definitely, there was some element of predictability in terms of the housing market, because the minute you saw these prices start to go up, rates start to go way up, immediately there's going to be a slowdown of buying, right? Because everything is getting more expensive on two fronts at the same exact time: the
Hmm.
pricing and the rates. So that's going to absolutely slow down demand and kind of create what we're having here. But the question becomes, like, is the next step a little cool off and resume buyers, or is the next step like ba-boom? You know what I'm saying?
Yeah. Hmm.
Because if
No,
it's
you're absolutely
ba-boom,
right.
which is totally has the potential to happen, totally
Yeah.
does. And that's coming from somebody who has most of my equity sitting in my property. So if that happens, my house is going to come down in price, and I'm going to feel the effects of that significantly. But what I would encourage everybody else in the scenario that I'm in, you have a house, which presumably has a really favorable payment. Even if the value starts to come down, the payment hopefully should be very favorable, assuming you didn't buy it like this year. You know what I'm saying? But if you've been sitting in a house, you've been
Yeah.
chilling in it since the COVID
Anyone
time,
who did, it really is really in trouble.
it would really, really, and that's where you start to see where that type of scenario, it makes sense that people are gonna slow down and buy, because honestly, anybody who's looking at a property, I've been telling them as a planner, I'm saying, hey, if you want to buy a property right now, love the thing, be head over heels with that property. That's my advice to you. If you do not absolutely love it and you're like, I have to have this property, pass. That's literally what I'm telling people, because again, the reality is right now the risk is just so high from,
Well,
I
I didn't
mean,
hear that advice from me. Thanks, bro.
dude, your situation, and I don't need to go into
I
details
know.
of the
I
podcast,
know.
is a little different. Is a little different,
That's fair.
but having said that, yeah, I mean, for people that are in there, like I said, I'm literally, because again, the interest rate one is not that big of a deal. You can always refinance. If rates go down, you can refi. If rates hang where they are or go up, you're going to be happy you just made a move and did what you needed to do and got in there when you could. So the rates are not that big of a deal, right? But having said that, like the pricing of the house, uh, it just makes it it's very difficult to know what's going to happen.
Yep.
It's because again,
And
right
again,
now
when
it's
you're
like,
talking about a house, I mean, this is no chunk of change. This is a huge, huge financial commitment.
of course,
So, like you said, you
and
need to be, at
at
this
that
time, you
point,
need to be darn in love with it to
and
the
at that
point where
point,
you're just afraid it's going to go off the market,
yep.
and don't want to lose it.
Because again, if you go in there and drop money on a house and then you go upside down on that house, I mean, and that kind of goes back to what we were talking about a couple weeks ago when we were saying how it's really difficult to like even imagine these things when you've never lived through it, right? Because again,
Mm-hmm.
the last real like wall up we saw in this country, like real wall up, was '08, right? And again, like we go back to that, like you, me, like people our age, people forget, people younger than us, they have no clue what that was like, you know what I mean, or
Yeah.
what that type of environment meant for their
Mm-hmm.
finances. So again, so for
Reading
like
about
that,
it and experiencing it are two different things.
so that's why again, like, and that's why again, so like the concept of like you could buy this house and it literally becomes worth less than what you owe, and now you owe money back, and the asset you have is not even worth that much. That when you like say that to someone, like again, I feel like a lot of them
It
might look at me like
stings
I'm, and they might even look at me like I'm crazy, right? Because again, like that's not going to happen, and it's like it totally could. It
because it
absolutely could,
has
especially
happened before.
it has happened before, and the variables right now, what I'm not saying is going to happen, I'm saying that the risk of something like that happening absolutely is on the table. So when you're talking about how much liquidity a house purchase takes away from you because they're taking so much of your assets and locking them into the house, and then furthermore taking so much of your monthly cash flow and taking that away. Again, I look at a lot of young people who have enough money to buy a house. They have enough money to do it. They could totally do it. And I look at them and say, listen, right now, what you have with your cash is flexibility.
Mm-hmm.
You have options. You have
Yep.
choices. I was like, if you make that house purchase, you take your choices away. You have no more
Yep.
choices. Those choices, the ability to make a choice, is a very powerful thing in this type of environment, a very powerful thing that not very many people have. So if
Yep.
you do have it, just because you can buy something doesn't mean you necessarily want to. Again, that freedom is very powerful.
Or
So
should.
again, you have options right now, and you and I both love options. I'm always, again, especially when you've worked your butt off, there's no need to buy the house. You know what I mean? Like you don't need it. You're doing
Right.
fantastic without it. Don't let whatever. If you love the thing, if you look at this place, you're like, I want to be here forever. I'm in love with this property. Do it. That's
Mm-hmm.
where I'm looking at them. And if you love this thing, you buy it. But beyond that, I basically am telling people to be very cautious because again, the real estate market has really not seen a good whack in a while. And I think that there's been a really long stretch here of people just buying and doing the Airbnb thing. And just like, again, there's been no punishment or anything like that. And if we enter any kind of like, hard going environment, I think that could definitely see the housing market could see a pretty significant
Mm-hmm.
impact from that.
It's
So
definitely
again,
coming. I, I,
this,
I, I don't. It's in my opinion. It's just again why
and
I
that's
didn't
why,
really fully understand it in '08, like as far as living and having the personal experience with like what our parents had and other people. But it just looks like it may not be of the same magnitude, but it just looks like it's the pullback from that is a lot more clear than it is in like the market right now.
no doubt, and then that will have an impact that will trickle down. It will all trickle. And while I don't know, obviously, again, because even the housing market we're talking about right now, you and I both feel pretty strongly about it. But having said that, dude, housing prices could come down a little bit, and people could just leap off the sidelines and totally ignore what I just said, and housing prices could just start going back up. But at the end of the day, like again, these risks are there's so many on so many different areas that it's right now just the uncertainty levels are just so incredibly high that it is just, again, pay attention, have a plan for you, make sure you're comfortable with where you're at, And if you have cash on the sidelines currently, if you are part of the $7.24 trillion that we talked about earlier, sitting in money market, that money is very powerful. It's flexibility. It's options. Don't feel rushed to leave it out, take it out of there. I've been telling a lot of my clients lately, my mentality is I'm getting 4.25, 4.25% for doing literally nothing, taking no risk whatsoever. If an investment wants to take my client's money out of that situation, you need to convince me. I need to be convinced and sold that it's worth it to take my money out of 4.25 for no risk whatsoever. So again, I reiterate that to everybody out there. 4.25 with no risk is pretty dang attractive, and you have options while the money sits there. So
remember, guys,
yep.
It does not have to sit there. This is not talking like a CD where you have to have it locked in for a term. You can move it. You can move it out as instantly as 1 to 3 business days.
Yep. 7.24
Flexibility
trillion.
and options. Again, boom.
Yep. So that's it. We can probably wrap it up here. We've gone a little over. Any questions for me, John? Anything you want to talk about? Budapest Dam?
No. Everything's been great. I just had a lovely coffee, cappuccino.
I've been sipping my my coffee here on the lanai. No birds, so no nature for you. Sorry.
Well,
It's been
I knew you were probably having coffee because, again, as a reminder, it is 9:51 Eastern time over there, while it's 3:51.
I am sipping coffee out of this beautiful mug that says CFP. I don't know if you knew this, John, but I am, in fact, definitely. A CFP.
It really is just hilarious.
Well, then that is all we got for you here. John, thank you so much for joining me in Budapest. I appreciate it.
Of course. Thank you so much, Alex, the CFP. As a reminder, everyone, he is a CFP. I am not. But again, I can't stress it enough how important it is that we know that, okay?
Oh, man, I love this podcast. It's great.
This podcast is great.
All right. Well, I appreciate you again, John. We will be back next week, back to normal, hopefully.
Oh, and I got something else for you.
What's that?
My bill for 2 cappuccinos was 3,726 Hungarian FT.
FT?
FT? That's what
FT? What's that conversion rate, John?
It's $10.57 US dollars.
Oh, John, the dollar is weakening by the second over here. Dude, Des helping you on your Budapest travels. A weaker dollar means your money goes further in other countries.
Yep. $1 in the US, I think, is 0.00 something 0.0028.
No, I'm just joking. I think you're going the wrong way. No. Yeah, I think your money's devaluing. Yeah, it's not good.
It's 351 Hungarian FT.
So you're saying
let's call it 352.
What you're saying is you should have bought stuff at the beginning of the trip, and then because it's getting more expensive as we go.
Exactly. Daily updates.
See, this is another thing that we get, right? And this is another piece of it, right? Because the dollar is devaluing, and dude, most of us don't even know what that would do, like what that even means. Most people are what does that mean?
Remember when a dollar used to be a dollar? It's now weighs a lot less than a dollar.
It's still a dollar.
So more money but more money is required to make it that dollar.
Ridiculous. Totally ridiculous. Anyway, let's get out of here, dude. I appreciate you, brother.
Thank you so much. Shout out to all of our fans. Have a lovely day. Budapest.
This is the We Love Money podcast. And until next time, everybody, that is Finance AF. John, thank you one more time.
Finance AF. I will see you guys tomorrow. Back in the States tomorrow.
He's on his way back. Have a great rest of your trip, man.
Thanks, man. Take care.
Later. Bye.